Bitcoin decisively passed the $70,000 mark this week, signaling a significant and sudden return of global market confidence. Market participants are now watching to see if upcoming macroeconomic data supports this new valuation or triggers a quick retreat. The first major test of this price floor arrives with the next Consumer Price Index report, which tracks the shifting inflation trends currently guiding overall market sentiment. At this level, the price functions as a temporary holding zone, while investors await the Federal Reserve's next major policy signal. The climb to $70,000 follows a month of shifting global sentiment that directed capital back into risk-heavy assets. This chart shows how steady capital inflows and institutional buying pressure provided the necessary volume to clear a major historical resistance zone. Looking back, previous attempts to hold this level were met with heavy selling. Clearing it now forces a recalculation of many short-term positions. While these institutional entries provided the initial momentum, they do not guarantee price stability against future shocks. The immediate direction of the market depends on the CPI data scheduled for release later this week. The impact follows a specific sequence. The CPI report measures inflation. Inflation levels guide the Federal Reserve's interest rate decisions, and those rates determine the total liquidity available for crypto. A cool inflation print, meaning inflation is lower than expected, suggests the Fed may cut rates sooner, driving prices toward new highs. A hot print indicates persistent inflation, resulting in continued high interest rates and a sharp rejection of the $70,000 price. This binary outcome leaves the market at a crossroads, where macroeconomic data will dictate the next phase of the trend. Intense volatility often follows the breach of long-term resistance, creating the potential for rapid price swings in both directions. Historical cycles show that breakouts without a supporting macroeconomic environment often lead to sudden capital flights back to safe haven assets. Effective risk management at these levels involves basing positions on data rather than the emotional momentum of the $70,000 milestone. Crossing $70,000 demonstrates high demand, but the CPI report will reveal if the underlying economy supports this price in the weeks ahead.